Managing the long call strategy. So there's two steps to managing any trade. The first step is managing the strategy before you've even placed the trade, and then the second step is managing the strategy after you've placed the trade. So let's talk about the pre-trade strategy. So that's all about picking the strike prices and the time frame. So what strike price should you pick for a long call strategy? Well, if you're really bullish on a stock, you choose an out of the money strike or an at the money strike. And the reason you would choose an out of the money strike is that it's cheaper than buying an in the money strike. And therefore your return on investment will be much higher if you're correct. However, if you are incorrect, your break-even price is a lot higher on an out of the money strike and your chances of winning are lower. By buying an in the money strike, you increase your chances of success. It costs more to place that particular trade. Our preference is to buy in the money calls because we like to buy real value in the call options, as we're paying less time premium in that scenario for the calls. What time frame should you choose? Well, we like to go out as far as possible, 1.5 to 2 years, in order for the trade to work out for us. So we like to give ourselves more time. Definitely give yourself at least 9 months, but if you can give yourself 2 years for a trade to work out, you should do that as well. So what should you do now once you've placed the trade? What scenarios can crop up? Well, with every strategy you should have a target for the share price. So if the stock price reaches its target, you would then simply go in and sell your call option for a profit. We show you how to do that in the trading section of this course. But what happens if the share price does not reach the target price? Well, then what you're going to do is still going to have to sell that call option for a profit or a loss, depending on where the share price is at. So it's important that you take action if your target price has changed as well. So this is really important between now and expiry. Remember, call options are time-wasting assets. So as each day ticks by, and if your target price isn't getting reached, you may need to take some sort of action on this call option strategy because you could be going into a loss situation, and that can be getting worse as each day passes by. So if your target price has changed, you need to change up your option strategy as well. And what happens if the share price at expiry is below the strike price? Well, unfortunately, there's nothing you can do here, and you're going to take a full loss in this particular trade. So that's why it's really important, if your mindset has changed or your target price has changed on the stock, you need to sell the call option and maybe apply a new strategy to the shares.